Last week, I had a visitor who was very keen on availing of our investment services. After all the discussion, he was very confused between the direct and regular option. And he bluntly asked me a question. What is it that I can get being an investor with a regular investment option? Is that also a question that is running in your minds as to what are the benefits of not going for direct and going through a regular investing route through an agent or a mutual fund distributor? If so, this video is for you. We all know some of the greats of the game of sports like PV Sindhu, Novak, MS Dhoni. All these are greats in their respective sports. One thing unites them all is that they are all blessed with a coach who guides them to be on top of their game. They couldn't have reached the heights of their expertise or championship without a coach. No doubt they're good players. They were always good players. But to be a champion, you need a coach. That is where this whole concept of regular investing has to play. I'm going to talk a bit about what is the difference between direct and regular investing so that we set the context on an even plane. Direct investing is when you don't have any intermediary and you buy the mutual funds directly from the respective mutual funds. Therefore, there is a lower expense ratio because there is no intermediary called the mutual fund distributor. The cost of buying the mutual fund is lower. You save money there. But in terms of understanding what are your needs as well as choosing the right mutual funds, that is entirely your work. So you will have to invest time, energy and effort to find out what your needs are and then do research to find out which are the best performing funds out there. Therefore, make an effort to invest in them. The direct option is very, very suitable for people who are financially savvy, who understand all this and who want to kind of have the decision making within themselves to buy what they want to buy. On the contrary, let's look at what regular investing is all about. Regular investing means that you are buying your mutual funds through an intermediary who could be an agent, a broker, or a distributor. Now, what are the advantages or benefits of investing through a regular option? Is that intermediary sits with you to understand what is your risk appetite, what are the goalposts that you're chasing, and what are the schemes that will be suitable for your investment option given your temperament. And therefore, pick and choose the funds that you should be investing in. So there's a bit of a homework that takes place out here. Third, all the paperwork and all the aspects relating to research as well as getting it implemented is the onus of the distributor. The distributor makes sure that your funds get invested into. Last but not the least, people who are busy in their day-to-day life, who don't have time to do research and find out and keep researching on a constant basis which are the best investment options for them, are best suited for regular investment options. We did a study of the difference between direct investing and regular investing over the past 11 years. Direct investing started from 1/1/2013, so it has an 11-year history now. And looking at that analysis, we have the following. In the example of HDFC Top 100 Fund, we saw that there is an additional cost of 0.7%. While the direct mutual fund gave a return of 16.37, the regular mutual fund gave a 15.67, a 0.7% additional cost. In the case of ICICI Blue Chip Fund, the cost was slightly more, 0.8% was the amount that was additionally charged. In the overall returns, yes, the regular mutual fund has definitely given you a slightly lesser return than your direct mutual fund. But going beyond this, what we want to also look at is what does regular investing provide for investors? Is it just the additional cost that one bears by going regular investing, or is there a further benefit? We have 7 benefits that I believe a regular investor gets by investing in a regular scheme of mutual funds. First up, mutual funds are best invested when you can marry them to a goal post. So if you have a goal post determined and a goal-based investment is assigned to you through your mutual fund route, it will help you stay the course and achieve your goals. And staying the course is very, very important because your distributor will constantly remind you and nudge you to make sure that the goalposts are reached by staying the course. Second, not all funds behave well all the time. There are times when some of the schemes are underperforming, some of the schemes are not performing as good as they should perform. In those times, it's the distributor who will come back to you and suggest you make those changes in your portfolio so that your portfolio can continue to perform to deliver the returns that you have agreed. Third, sometimes because of market volatility, you really don't know whether you should stay invested or you should sell out and exit. These are times when your mutual fund distributor can provide tremendous value and advice in making sure that you take the right course of action. Every year for tax filing purposes, your CA will ask you for a bunch of documents. He will ask you for your capital gain statement, he will ask you for your dividend statement, he will ask you for your interest statements. All of these, your mutual fund distributor will be easily able to compile and give it to you. Next, investments are not just about mutual funds. Usually, mutual fund distributors also distribute various other investment products like bonds, debentures, portfolio management schemes, and so on and so forth. So by going through a regular option, your mutual fund distributor not only gives you exposure to mutual fund, but he will also give you a variety of different options suited to your particular need. Many a times, it's not just about investing. Sometimes we just want to look at some investment decisions like, should I close my loan from the bonus? Should I do something? There are financial decisions we need to make. In all these cases as well, your mutual fund distributor will play a role, will guide you in that matter. Last but not the least, all financial goals which are long-term in nature, we need to revisit and review them at least once in 3 years. Your mutual fund distributor will sit with you across the table and help you review these plans once in 3 years to ensure that you're staying on course. And if for some reason you are not, he will take corrective actions to make sure that your funds are doing what they should. Now, these are the 7 benefits that you should normally expect from your mutual fund distribution. I believe that there is no free lunch, my friend. Every professional has a fee, and the mutual fund distributor's fee is the commission or the brokerage he receives from your investments. Now, to do that, to earn that, he provides a variety of different services to ensure that you meet your financial goals. So, if you sleep peacefully after investing and you are able to put all your energies to your work and your career, then your mutual fund distributor has given you a great service. As they say, Sarathi Zaruri hai. I am Babu Krishnamurthy, the Chief Sherpa at FINSHERPA Investments Private Limited. If during the course of this video you saw any bias towards regular investing, it is because we are distributors of mutual funds and offer regular investing route for investors. I wanted to be absolutely transparent to ensure that you understand where we are coming from. Hope this helps.